I'm Deborah Borchardt, and this is your midday market update. The markets are mixed as we head into the afternoon hours. You know, we started out with some good earnings out of some companies, not so good out of others. But here's the thing, industrials, most of them are giving good guidance, but we did get some economic numbers that are kind of making the market take a pause. I'm joined with Keith Bliss from Cuttone. So Keith, let's talk about that data that just came out.
Right, so the Richmond Fed Index came out and it was really weak compared to some of the other manufacturing sector data that we've gotten out of the Philly Fed and the Empire State Manufacturing that we've gotten either earlier this week or at the end of last week, which were pretty good numbers, signaling in the larger sections of the country the manufacturing was picking up, both the new orders, inventory. They felt good about sales, but the Richmond number today was just fall off the world bad. I mean, the surveyed economists expected the reading to be an 8 on their scale, and it actually came in at a -11. And the reason it was so bad is that new orders and deliveries were really weak from month to month, and they were weak last month, so that's giving everybody a little bit of pause. Now, one of the reasons that we're not dramatically selling off on that news is a lot of people don't give all that much credence to the Richmond Fed Index, although it is a very large manufacturing sector in the country. But also the 6-month outlook in the survey that they did had people feeling more confident about what their business was going to be like, both in terms of new sales and hiring. So that's stemming the tide a little bit here.
Well, that's what I was going to say, because I know from some of the industrial companies, they have been giving some good guidance toward the end of the year. You know, things like Otis Elevators, great sales, great sales in China. Aerospace had really good numbers. So some of the industrial companies are giving some nice things, positive things to say.
They are, and that's a bit of a surprise for this quarter because the industrials were expected to be kind of that middle of the road sector. We knew that the sector that was going to have great earnings was going to be the financial sector, and sure enough, all the companies that are reported up to this point have held to that fact. We knew the sector that was going to be really weak for this quarter in earnings was going to be the technology sector, and in fact, Google and Microsoft have already shown that, and hopefully Apple won't be any weaker than they're already being projected to be, which has them coming in consensus about $7.33 a share, which is much weaker than the year-ago quarter. But the industrials is interesting because that's something that I look at all the time because that is real-world, old-world economy companies in there. And if GE is selling turbines, if Caterpillar is selling mining equipment, then we feel good about the global economy. I think most of the industrial companies are going to have a little bit of a slowdown in the second quarter, which they're showing, but their guidance is good, saying that they expect global growth to pick up in the second half of the year and then into 2014.
When we do look at these numbers, we are still at pretty good record highs. There are a lot of people with cash that have pulled out of the bond funds, but they didn't go into the stock funds. They pulled out of bond funds, gone into cash. Do you think we're going to see that cash get to put to use in these stocks, or are they waiting for that pullback?
I think if we get through this earnings season, which again everybody is expecting in aggregate to be fairly tepid, good sectors like financials, bad sectors like technology, but in aggregate it'll be fairly tepid. If we get through this earnings season and the market stays up here at these levels, you will see that cash come in and be put to work. I've been on record by saying that 1700, 1710 in the S&P is absolutely within the cards. I mean, it's easy to say now we're only a couple of points away as we stand here right now, but there's been so much momentum that's been built into this market on fairly low volume that it's got to get there, and you're absolutely right. Once people sense that and we stay at these levels, they will put that cash to work because some of it will be chasing return, and then other people will just say, I have to get into the market because I need to be there for some sort of return.
Yep, you got to be in it to win it. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.